Okay bro, welcome to the new video. Today we will analyze this company called Target Corporation with the stock ticker TGT, and the reason why we will analyze it is because on Tuesday they have an ex-dividend date. That means that if you would like to receive the next dividend payment, you have to buy the stock until Tuesday. Otherwise you will not receive it, okay? And for an American stock, they are relatively okay in terms of the price, because as you can see on the right, they are trading at $149.61, and their dividend yield is around 2.6%, which is, if I am honest with you, quite average to be honest, but what can we do, you know? And we will also take a look at 10-year graph, and as you can see, if you would buy the stock in February 2014 and then sell it, let's say in this February 2024, altogether you would receive a profit of 143%, let's say. But if you would buy the stock each month for one particular amount, basically with dollar cost averaging, altogether you would receive 9.4%, okay? And as always, let's take a look how old the company is, and they were established in 1902, which means that they are around 122 years old, which is perfect because we always want to buy stocks which are 50 years old or older, okay? Because that means that they survived quite a few of crises, for example, Corona crisis, then last year I think when all those banks went bust, you know, or maybe 2008, you know, when Lehman Brothers went bust and so on, and that basically all of those crises. Now let's analyze its financials. We will basically analyze income statement, balance sheet and cash flow statement with the help of this website called Macrotrends. It's going to be in the description, don't worry. And basically I copied all the important data into my Excel here table, you know, so that you don't have to, okay? And now we will go through all of the financial statements, you know, income statement, balance sheet and cash flow statement, and I will tell you if you should buy or sell this stock, okay? Let's start with total revenue. Total revenue, as you can see, it's growing through the last 10 years, you know, because we will always analyze 10 years or more, because that will give us wider perspective of the company, you know, how they function, how they make business and how good the management is and so on and so on, okay? Here they are growing in terms of the revenue, so here we will buy the stock, okay? So this is a good sign, okay? Gross profit is also in the last 10 years, it was quite stable. It went a bit up and then down. So let's put here sell, because we want to be as harsh as possible when we analyze the stock, okay? This one would be neutral, like gross profit, but let's be harsh, okay? So that we have, just in case, that safety of margin if we were wrong in our evaluation, that we still are on good track, okay? And then as you can see here, gross margins are calculated by dividing gross profit with total revenue, and preferably we want to have this more than 40%, okay? And right now here it's around 30, 25 and so on, which is not good, so we will sell this in terms of the gross margin, okay? And then operating income, I don't have the graph here because it's similar to the net income. As you can see, it's growing a bit, and then falling massively in 2023. So we will put that as a sell. And then we have net income. Net income went down here in 2015 and then up again, and it was growing until 2022 and then falling again massively in 2023. So now let's be harsh, let's put it on sell, because otherwise operating income and net income would be as buy, okay? And then net income margin is calculation between net income and total revenue, and we want this to be more than 20%. So here it's around 3, 4, 5, I don't know. So we will put the sell, okay? Okay, here is also a graph, you know. And then capital expenditure divided by net income is basically capital expenditure from the cash flow statement here, divided by net income. And as you can see, it's growing massively, which is finally a good sign. So here we put buy. Okay, basically here we have 1 and 2 buys and then 1, 2, 3, 4, 5 sells. So income statement is kind of bad, and we will put it as a red flag, okay? So basically sell. Now let's go to balance sheet. Here we will analyze long-term debt firstly, and as you can see, it's quite high, you know, it's growing a bit in 2014-15 and then falling, which was a good sign, and then now growing again massively. so here we put sell, of course. Retained earnings are earnings that company reinvests back into the company instead of paying it to the shareholders. And as you can see here, they are falling, which is a bad sign because the company doesn't invest in company itself, but rather pays the dividends, okay? And then total equity is also basically all the cash that they have, for example, stocks, factories, all the goods that are in the warehouses and so on and so on. And as you can see, it's falling through the years, so we will put this as a sell. And then return on equity is, you know, how much basically they get the profit based on their equity, based on their money, you know. And as you can see, it's around how much? 30-25% here based on the graph, and then it grew massively and fell again on 20-25. This is quite a good return. Now you want to have preferably a return which is around 10%, maybe 20%. So this company is quite good. You see, you can see that they are growing in the last few years, so that's good, you know. Total liabilities are of course all the costs that they have. Basically, if they take a loan, if they have to pay the taxes, pay the salaries, basically all the outcomes, all the outflows, everything that decreases the money of the company. And they are growing through the years, which is a bad sign, so I will put it as a sell. And then here we have the ratio between debt and equity, which is preferably less than 60 or at least less than 70%. And as you can see, this is growing through the years, so we put that as a sell as well, okay? And balance sheet is unfortunately also sell. And then we have cash flow statement. And here we analyze capital expenditure and dividends that were paid. And basically capital expenditure means how much they invest into, for example, land, into factories, into machines, you know, basically how much they invest into the equipment, okay? And here it's growing through the years, so here we will put buy, you know, finally one good sign, this is a buy. And also dividends that were paid through the last 10 years are also growing, which is also a buy, okay? Because when you have a company, bro, you want to have at least the last 10 years of dividend payments, okay? That means that the company is kind of healthy, that it's functioning good, so don't worry about it. Okay, now the cash flow statement is also a green flag, basically buy, you know. I don't know why I didn't mark. Okay, now. And let's now decide if we should buy or sell this stock, okay? For me personally, bro, I wouldn't buy this stock, I would sell it, because as you can see, even though their revenues are growing, net income is, you know, they are at least in plus, still they have the ratios quite low, you know. I don't know, they have more and more debt, which is a bad sign. Maybe they are investing more into the business, I'm not sure. Maybe they have some internal problems, I'm also not sure, I don't know. It's basically a bad sign, you know. Their total equity is falling, their net income was falling, even though it was growing amazingly through those 10 years from 16 to 22. Gross profits are, you know, last year they were falling a bit, so I don't know really, bro. The only good thing is cash flow, you know. They are investing back into the business, which might explain why they have so little net income. Maybe they are reinvesting everything into the business, but only time will tell, you know. Let's wait for the annual report of this year, of like the Q1 in 2024, and then we decide what to do, okay? Based on the dividends, yeah, it's a buy, but overall, bro, their financials kinda suck. Let's see what happens, you know. But as for the moments, I wouldn't buy this. So now you know what to do, bro. Do the hard work and see you on top of the world.